Hi there, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stock markets bounced on Friday night, buoyed by inline inflation data, while brushing off a spike in geopolitical tensions following a tense exchange between US President Trump and Ukrainian President Zelensky. Despite Friday's rebound, the Nasdaq still finished 3.4% lower last week for its worst week since November last year. While there was some positive news to be had on the inflation front, concerns about an economic slowdown were fueled by a surprise fall in the personal consumption expenditures, which, coupled with a surge in imports, has resulted in estimates of Q1 2025 US GDP being cut significantly. This week, attention will be on Friday's non-farm payrolls jobs data, and given the current concerns around a slowdown, there will be no room for a disappointing jobs print. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as we start the new week. All right, so just blowing this Nasdaq price action up over the past couple of months, we can see that the Nasdaq's been broadly in a range, and about a week and a half ago on the 19th of February, it spiked just marginally above this range high. It was on waning momentum, as we've noted in previous videos, and we thought that that might signal that we'd had a false break higher and that a decline was likely to follow. And that's exactly what played out, with the Nasdaq falling about 1,600 points into the bottom of this range here, defined by this 13th of January 20,500 low. Now, what you can see on Friday of the week just completed was the exact opposite of what happened here. So we had a false spike higher rather, and then a retreat. Now we've seen a little false break lower, and it closed back within the ranges. So what we're looking at here with the Nasdaq is, combined with the idea that there is an extremely strong band of support between this 20,400, you've got this low over here, 20,315. The 200-day moving average is coming in currently around 20,200-ish. It's extremely strong support, not to mention this uptrend support coming in just below 20,000, going all the way back to this December 2022 low, which you can't quite see on the chart for there. It just came into focus then. So a lot of support in and around this area, combined with this false break lower on the shorter time frames, it has me thinking we're looking for a low, or may have actually touched a low on Friday night, and that potentially we can see a rebound back up towards the top of the range. Now, if for any reason these support levels started to go from 20,400 down into this area here, then you would probably consider that a sustained break below this area signifies that the Nasdaq is coming all the way back initially towards 18,800, back towards 17,453. As I said, it's not my base case. My base case is, with this area of strong support, we should be looking for a little bit of a low here, and potentially, if it could take out these range highs, then we've probably got the green light in terms of the correction is over and the uptrend has resumed. It's a similar story for the S&P 500, except what you can see here is the S&P 500 touched the uptrend support coming from the Fed's October 2023 pivot low, which was at 4,103. And it had a little look below. It didn't like it. It was down there for a very short period of time, and it closed above there. So what it's done is it's left us in two minds as to whether this is a dead cat bounce, and potentially we're going to come back down here and retest these important support levels, or potentially this was the final leg of a correction that's been really playing out in terms of a sideways market since this December high over here. I don't think we're going to know that for a few days, but what I can sort of highlight is, again, some extremely important support levels here. You've got the uptrend support coming in around 58.60-ish. You've got the year-to-date lows coming in at 57.73. And then below, you've got the 57.20 level coming in from the 200-day moving average. All three of those levels would need to break for me to think that something more sinister is happening, other than the fact that we have entered a correction in the S&P 500. So they're the key downside levels to watch for the S&P 500. In terms of the upside levels, well, it's pretty clear. We've got this 6,100 to 6,150 resistance area. which should be met with, if the S&P was to get up here, I think it'd be met with selling. But if it was to get above here, then yeah, look, the correction is definitely complete, and we're probably heading up towards 63.50 to 6400. That's all for this week. Thank you for listening.